Do you know what Section 40AI of the Income Tax Act is and how it affects your taxable income? This section, in essence, governs the disallowance of certain types of payments if the tax deducted at source or TDS has not been deducted on those payments. So, what does this mean in practice? Imagine you're a business owner who has paid rent for your office space throughout the year. The total comes to a substantial sum, and naturally, you'd want to claim this as an expense when calculating your taxable income. However, if you haven't deducted TDS on these rent payments, Section 40AI steps in. According to this section, you can't claim these expenses. In other words, you'll have to pay tax on a larger amount of income than you initially thought. This doesn't just apply to rent payments. The list of expenses that Section 40AI covers is extensive. It includes payments like interest, commission, brokerage, royalty, and fees for both professional and technical services. If you've made any payment towards these expenses without deducting TDS, then you won't be allowed to claim them when you're calculating your taxable income. So, the implications of Section 40AI are clear. It serves as a reminder to every taxpayer to deduct TDS on payments for certain expenses. If you don't, you may find yourself unable to claim these expenses, potentially leading to a larger tax bill than expected. To summarize, Section 40AI of the Income Tax Act is a provision that disallows the claim of certain expenses if TDS has not been deducted on them. These expenses include payments like rent, interest, commission, and fees for professional and technical services. If a taxpayer fails to deduct TDS on these payments, they cannot claim them as expenses when calculating taxable income. By understanding and complying with this section, taxpayers can avoid potentially costly surprises come tax season.